Using candlestick analysis, it's much easier to see if the markets are consolidating or having a reversal. As we saw today, we can kind of calculate or visually analyze that the markets did a consolidation day because note that the Dow continued to trade higher ever since it broke out of this wedge formation going into another wave. While at the same time the NASDAQ was trading lower. So logic says if there's one area that's being bought and another area that's being sold off, that there isn't a reversal in the market. It's just shifting of funds from one sector to the other, or profit taking in one area. So using the visuals of candlestick analysis, you get much more common sense application to tell you what the overall trend of the markets are doing or what an individual price is doing. Because it is all based upon common sense analysis of investor sentiment, the Japanese rice traders make for very simple stop losses or entry strategies. For example, look at the J-hook pattern. This was from an uptrend, a pullback, and then a J-hook pattern that brought us back up above the T-line. We recommended SQM down in this area, and it continues to stay long as we stay above the T-line. But now we can put some other very simple applications to our analysis. We did a doji in the overbought area, and it's moved away from the T-line. There's a simple rule of the doji. It's usually going to move in the direction how they open after a doji. So if we see it open lower tomorrow, we might take some profits. If we see it trade below the low of that doji, that tells you the bears are definitely in control, probably coming back to test the T-line. So the logic that is built into the graphics, the candlestick analysis, are just as good for getting into a position as they are for taking profits coming out of a position. And that is the major benefit of candlestick signals. Our recommendation on ARWR had a safety stop right below the lows of the shooting stars. Again, we're in the overbought condition. We've had a nice uptrend. The shooting stars tell you there's some weakness starting to come into the trend. A safety stop just below the lows tells us that's where the price is moving. It's time to take profits. That same rationale can be utilized when shorting a position. Short this position, then we have a doji in the oversold area. Very simply, you put your stop at the high of that doji, because if there's enough force to start bringing it back up, that pretty much tells you the bulls have taken control. Everything about candlestick analysis is mere common sense put into a graphic depiction. And not only does candlestick analysis tell you when to be in a position, it also tells you when not to get into a position. As we can see on the analysis of the trend on NVIDIA, there's a wedge formation. It's been trying to break out through the top of the wedge, but it hasn't been able to. We can assume that as long as it's in this wedge formation, there's not going to be any profitability. But we also have the benefit of seeing what type of signals either break out to the upside or break down to the downside. But while it's in this wedge, we want to be someplace else where there's better prospects for making profits. That'll be it. We'll see you in the chat room.